In the quiet halls of financial markets, where billions change hands every second, one metal has just sent shockwaves that no one saw coming. Silver, the lustrous white metal that's been a store of value for thousands of years, has just made a move that's left traders, investors, and analysts scrambling for answers. This is the story of what's happening right now in the silver market, and why it matters to everyone, from the billionaire hedge fund manager to the everyday investor trying to protect their savings. It started on what seemed like an ordinary trading day. But within hours, silver prices began moving in ways that defied conventional market wisdom. Traders watched their screens in disbelief as prices surged, then dropped, then surged again, all within a few hours. I've been trading precious metals for 25 years, and I've never seen volatility quite like this. Silver moved 7% in a single session. That's the kind of movement you might see over weeks or months happening in just hours. To understand why this matters, you need to understand silver itself. Unlike stocks or cryptocurrencies, silver is a 5,000-year-old store of value. Ancient civilizations used it as money. Today, it's both an investment and a critical industrial metal. It conducts electricity better than any other element. It reflects light almost perfectly, and it kills bacteria on contact. These unique properties make silver irreplaceable in everything from solar panels to smartphones, from medical equipment to missile systems. But here's what makes this moment unprecedented. For the first time in modern history, multiple powerful forces are colliding simultaneously, creating a perfect storm that's driving silver into uncharted territory. To understand what's happening with silver, we need to talk about the US dollar. These two have been locked in an inverse dance for decades. When the dollar weakens, silver rises. When the dollar strengthens, silver falls. The relationship is mathematical. Silver is priced in dollars globally. So when the dollar loses value, it takes more dollars to buy the same ounce of silver. But there's something deeper happening now. Since the financial crisis of 2008, and especially during the recent pandemic, central banks have printed trillions of dollars in new currency. The Federal Reserve's balance sheet has exploded from under $1 trillion to over $8 trillion. That's 8 times more dollars competing for the same goods and services. Every time in history when governments have massively expanded their money supply, precious metals have ultimately responded. It's not speculation, it's mathematics. More currency chasing the same amount of physical metal means higher prices. But there's another factor at play: interest rates. For years, rates were at historic lows, even negative in some countries. When you can't earn anything on cash, suddenly holding physical silver doesn't seem like such a bad idea. You're not losing the opportunity to earn interest because there is no interest. Now, as central banks have raised rates to fight inflation, the equation has become more complex. Higher rates should hurt silver. But something unexpected is happening. Investors are looking past short-term rate movements to the bigger picture, a world where trust in paper currency is eroding. While investors debate monetary policy, a quiet revolution has been transforming silver from primarily a monetary metal into something far more valuable: the indispensable material of the green energy transition. Every solar panel requires approximately 20 grams of silver. There is currently no substitute that matches silver's combination of conductivity, reflectivity, and durability. We've tried. Believe me, with silver prices where they are, we've tried everything. Here's the staggering reality. Global solar capacity is projected to triple by 2030. That's not a maybe. That's already under construction. China alone is installing more solar capacity every year than the entire United States has ever built. Each megawatt requires approximately 60 to 100 ounces of silver. Do the math. We're talking about hundreds of millions of ounces of new annual demand, and that's just solar. Then there's the electric vehicle revolution. Traditional car uses about 15 to 20 grams of silver. An electric vehicle uses 50 grams or more. Every charging station, every connection point, every switch, they all require silver. Silver isn't just in the vehicle, it's in the entire charging infrastructure. We're building out millions of charging points globally. Each one is silver intensive. The scale of this build-out is almost incomprehensible. We haven't even mentioned 5G. The rollout of fifth-generation wireless networks requires millions of new base stations. each containing significantly more silver than previous generations. Or the explosion in data centers driven by artificial intelligence and cloud computing. Or the Internet of Things, which will connect billions of new devices, each one containing silver contacts and circuits, talking about a fundamental rewiring of human civilization. Every aspect of this transformation, renewable energy, electrified transportation, digital connectivity, is built on silver. There is no green future without massive amounts of silver. So demand is exploding. That should mean mining companies are racing to produce more silver, right? Here's where the story gets really interesting and alarming. People think you just dig more holes when prices go up. It doesn't work that way. From discovery to production, a new silver mine takes 7 to 10 years, and we're not finding many new deposits. The grade of silver, or the concentration of silver in the rock being mined, has been declining for decades. Today's miners are processing more rock to get less silver. Existing major mines are depleting, and environmental regulations, while necessary, have made new mine development increasingly difficult and expensive. Here's the twist that most people do and understand. 70% of silver production is actually a byproduct of mining other metals, primarily copper, lead, and zinc. This means silver supply isn't really controlled by silver prices. If copper demand drops, silver production drops too, regardless of what silver itself is worth. It creates a very inelastic supply situation. For years, the market has been in deficit, meaning annual consumption exceeds annual production. The gap has been filled by drawing down above-ground inventories. But those inventories are finite, and they're dwindling. Industry experts project that structural deficits will continue for years. When above-ground stocks are exhausted, the only solution is higher prices, high enough to either stimulate new supply or ration demand. While industrial users worry about supply, a new generation of investors has discovered silver, and they're approaching it differently than their parents did. My generation doesn't trust the traditional financial system the way our parents did. We saw the 2008 crisis. We've lived through currency debasement. Silver is something real, something physical. Nobody can just print more of it. In early 2021, retail investors organized online and launched what they called the Silver Squeeze, an attempt to expose what they believed was price manipulation in the silver market. While controversial, the movement revealed something significant. Millions of ordinary people were paying attention to silver for the first time. What we saw was unprecedented coordination among retail investors globally. They were buying physical silver, silver ETFs, mining stocks, anything related to silver. It showed that the market is no longer controlled solely by large institutions. But it's not just retail investors. Institutional money is flowing into silver at unprecedented rates. Silver ETFs have seen sustained inflows. Hedge funds are taking positions. Family offices, the investment vehicles of the ultra-wealthy, are allocating to precious metals as a hedge against systemic risks. Silver offers something unique: industrial demand that's accelerating, supply constraints that are real, and monetary properties that protect against currency debasement. Finding assets that check all those boxes is extremely rare. We haven't even discussed Asia. In countries like India and China, silver has deep cultural significance. Wedding seasons see massive physical silver purchases. Investment demand from Asia provides a stable base of consumption that's largely price-sensitive. Beyond fundamentals, the technical picture is flashing signals that traders haven't seen in years. Silver just broke through resistance levels that had held for years. When you see these kinds of breakouts, with strong volume, it often signals the beginning of a major move, not the end. One metric particularly fascinates analysts: the gold-silver ratio. Throughout history, this ratio has averaged between 50 and 80, meaning 50 to 80 ounces of silver equal 1 ounce of gold. Recently, this ratio spiked above 120, suggesting silver was extremely undervalued relative to gold. When the ratio gets that extended, it eventually reverts to the mean. When it does, the moves can be violent. Silver can outperform gold by multiples during these reversion periods. Underlying all of this is a world that seems increasingly unstable. Trade tensions between major powers, regional conflicts, political polarization, banking sector stress, sovereign debt concerns. Uncertainty is the friend of precious metals. When people lose confidence in institutions, in currencies, in the stability of the system itself, that's when they seek tangible stores of value. Some countries are actively working to reduce their dependence on the US dollar for international trade. De-dollarization efforts, while gradual, are real. If the dollar's status as the world's reserve currency is even slightly diminished, the implications for precious metals are profound.
Wow.
So what does all this mean for the average person? Should you care about silver price movements? Most people should have some exposure to precious metals as part of a diversified portfolio, typically 5 to 15%. It's not about getting rich quick. It's about protecting purchasing power and hedging against scenarios where traditional assets struggle. There are multiple ways to gain exposure: physical silver coins or bars, silver ETFs that track the metal price, mining company stocks that offer leveraged exposure, or even silver-related futures for sophisticated traders. Each approach has trade-offs. The key is matching your approach to your goals and risk tolerance. Silver is volatile. There will be dramatic ups and downs. Anyone investing needs to be comfortable with that reality and take a long-term perspective. But let's be clear-eyed about the risks. Silver has disappointed investors before. It had a massive bull run to $50 per ounce in 2011, then crashed and spent a decade in a bear market. Many investors who bought at the top suffered severe losses. Silver bulls have been predicting major price explosions for years. Sometimes they're right, often they're not. Smart investors acknowledge these risks while weighing them against potential rewards. No investment is certain, silver included. Silver stands at a unique moment in history. The convergence of massive industrial demand from the green energy transition, constrained supply from depleting mines, unprecedented monetary expansion, and growing investment interest creates a situation unlike anything the market has seen before. The world is building a new energy infrastructure, a new transportation system, a new digital connectivity network. And all of it requires silver in quantities that may exceed available supply. The question isn't whether silver is important. The question is whether the market has fully recognized just how important it's become. And that is what makes this moment so fascinating and potentially so profitable for those who understand what is really happening. The shock to the silver market may be just beginning. The real story is still unfolding. Thanks for watching. Remember to consult financial professionals and do your own research before making any investment decisions. If you found this video informative, please like, subscribe, and hit that notification bell for more deep dives into the markets. Hey, see you next time.